Hey folks, CA Rachana Ranade here, and I welcome you all to yet another interesting video which is about magic of results. But my voice has shown no magic. You might be like, Rachna, what's wrong with you? Last Friday also when you released the video, your voice was not that great. Even today, your voice is not great. What's the matter? The matter is that I have shot both the videos on the same date, that is on 3rd of December, and we are releasing the video one by one in one video per week is how we are releasing these videos. Then what am I doing now? I am in New Zealand, or when you see this video, I would be in New Zealand at that time. And if you want to see what fun I'm doing in New Zealand, you can definitely check out my Instagram. That's where I would be posting some nice videos about my New Zealand tour, right? So let's come back to today's video. It's about the magic of results. Now, what do I mean by this? First, have a look at Nifty, and for that, have a look at this. And you will see that Nifty has corrected by almost 7.5% as at 3rd December 2024. Now, in spite Nifty falling by almost 7.5%, there are some names which have fallen more than that. Typically, something like defense stocks, I'm sure you might have checked, defense stocks have fallen by almost even 25-30% more than that as well. There are some stocks which, in spite of Nifty hitting lower lows, some stocks are hitting higher highs. So today we are going to understand what could be the reasons why some stocks outperform the market, and in typical words we call this as generating alpha. Correct? So what do we mean by alpha? If market is giving, let us say, X% return, X plus 2%, X plus 5%, X plus 10%, whatever, anything over and above market returns is nothing but alpha. Okay, so we are going to try and understand which stocks have generated alpha in the last few months and why has that happened. Acha, is it big players which are generating alpha? Answer is no. If you want to have a look at some stats, HDFC Bank last 1 year has given barely 1 to 2%. Reliance in the last 2.5 years has given almost 0%. HUL last 3 years returns almost 0%. Kotak Mahindra Bank last 3 years returns almost 0%, and Asian Paints also last 3 years returns almost 0%. Now, when these big names are not giving returns, which are the stocks that are giving returns? Again, we are going to talk about 3 examples, and I'm going to tell you the logic behind these stocks performing well. Everyone knows these are not to be considered as stock recommendations. Now let's move on with the first company, that is Coforge. So Coforge has risen by almost 23%, where markets were down by almost 7.5%. So what are we going to do in the analysis part? We are going to talk about analysis in two major parts. Number one, we'll talk about the financials, and number two, we'll talk about the management commentary, right? In financials, we are going to talk about 2 points. We are going to compare Q2FY25 with Q2FY24, and we'll also compare Q2FY25 with the estimates or expectations of Q2FY25. Simple. Now let's go one by one. First is revenue. Revenue was up by 34.5% from 2,276 crores to 3,062 crores, and this 3,062 crores was, that exceeded the expectations. Why? Because the estimates or the expectations were 2,713 crores. Okay, so good one. Second one, talking about EBITDA now. EBITDA was up by 20.8% from 341 crores to 412 crores, whereas the estimates were only 373 crores. Now, if I want to talk about net profit, again up by 9% from 234 crores to almost 255 crores, whereas the estimate was 246 crores. Now, all in all, what is the common of three? In all 3 points, be it revenue, be it EBITDA, and be it net profit. Number one, the figures YOY growth, Q2 YOY growth. In all these 3 cases, it has performed better as compared to the Q2 FY24 figures. And number 2, all 3 figures were higher than the estimates. Does market cheer such numbers? Absolutely yes. Okay, but is it only the numbers that get cheered, or is it also the management commentary which is important? Of course, management statements, management commentary also gives a good direction to the stock. Now, management specifically mentioned about one brownfield acquisition. Now, what is a brownfield acquisition? Where one company grows not because of building one more factory right from scratch, but instead of that, a company grows by acquiring an existing company. Now, when such an acquisition happens, obviously, the revenue of the acquired company is clubbed up with the company which is acquiring that company. Their profits get clubbed up. The employees may also join the main company. So, all in all, what happens is that the company which takes over another company, their size will increase, their profits may increase, the overall margin expansion can also, I mean, overall margin expansion can also happen. So what has happened in the in the case of Coforge? Let's understand that Coforge acquired a 54% stake in Signity Technologies. Now this case of Coforge acquiring Signity Technologies, that was pending with Competition Commission of India. Please understand that unless and until Competition Commission of India doesn't give a green signal, the merger cannot go ahead. So what happened is that in Q2FY25, Competition Commission of India gave a green signal, and that is when management very clearly mentioned that this could definitely boost our revenues, right? Not only revenues, they have also secured orders worth $516 million. They have added 13 new clients, and they have increased their workforce by 5,871 employees, which includes Signity's 4,430 employees. So that's a significant jump in orders, in new clients, in new employees, and obviously in revenue as well. Now, what has the CEO mentioned? The CEO has mentioned that the attrition has decreased and company anticipates sustained growth and margin expansion driven by the successful integration of Signity. Now, you might be like, Rachana, why is Rachana stressing on this point of successful integration of Signity? So, I'll tell you practically, I've seen so many cases that when, let's say, A company and B company are merged together, typically A and B, when they were different set of companies, the work culture typically tends to be different. When two companies come together, there are great chances that the employees are not able to adjust to new work cultures, and the attrition typically shoots up. But what they have specifically mentioned is that in fact the attrition has decreased, and all in all, looking at this management commentary, it feels like there could be a case of synergy benefits, because of which we could see some good numbers in the coming quarters as well, based on the management commentary. Now, if you have a look at the chart, have a look at this, you can see that the previous high was taken out somewhere in September or October. Once this was taken out, after that, stock kind of consolidated, went up, retested, and post that, the stock has given a nice upward move as well. So, all in all, what typically happens is that whenever numbers are good, are better than expected, stock prices typically cheer such a situation. Question is that will it sustain this or not? Of course, there are a lot other factors to look at, but I hope you have understood that because of Q2 results, we could see a good momentum in the stock prices. Well, before we move on with the second stock, one point is really important: whether stock price goes up or whether it goes down. Your knowledge should always go into the upward trajectory. But how can that happen? You have to smash the subscribe button, you have to hit the bell icon so that whenever I come up with any video, you will get a notification. Thereby, you will be alerted to watch the new video, and your knowledge would definitely go in a higher high, higher low trend. Now let's move on with the second stock, which is called, which is the name of which is Indian Hotels Limited. Okay, I want you all to tell me in the comment section which famous hotel chain is owned by Indian Hotels, which famous hotel chain is associated with Indian Hotels. If I were to talk about numbers, as I mentioned, when market corrected by almost 7.5%, this stock was up by almost 13%. So again, we are going to do the analysis based on two major things. Number one, how do the numbers stack up, and number two, we are going to understand about the management commentary. Now, what did we learn in the previous stock, Coforge? In the previous stock, we learned two major points. Number one, if the current Q2 numbers are better as compared to last quarter two numbers, it's good. Number two, we also learned that if the numbers are better than the estimates, again, that is good. So let's see the same point, whether it's applicable for Indian hotels or not. So first, revenue up 27% from 1400 crores roughly to 1800 crores. I'm going to round off the figures, right? And how much was the estimate? 1700 crores. Thumbs up. EBITDA up from 350 crores to 500 crores plus. Estimate was around 468 crores. Again, a big thumbs up. That's an increase of almost 41%. But the best part is about net profit, which is up 232%, which was up from 179 crores to 554 crores, whereas the estimate was only 248 crores. So please understand, whenever the profitability numbers, revenue numbers all show a big jump, that is definitely cheered by the stock price. Now we need to understand whether they did any brownfield acquisition, or are they using certain strategies because of which, or are there certain key parameters which have shown growth or which have shown better results because of which it translated into better numbers like increased revenue, increased EBITDA, increased profitability. So first come first, management has given a very healthy guidance, which is a double digit revenue growth for entire financial year 2025. They said that we can see a sustained growth in not only the new business but also healthy same store performance growth. So basically what does this mean? They are saying that for existing hotels as well as new hotels, we expect our revenue to increase by at least a double digit. So minimum 10% revenue in the top line, not only for existing hotels but also for new hotels, right? Second thing that they have mentioned, very interesting point, international consolidated portfolio has reported an occupancy of 75% and which is up by 600 basis points or 6%. So simple, na? If they have a better occupancy, that will lead to what? Increased top line, right? And one more interesting point they have mentioned, it's not only that the occupancy has increased, it's occupancy increase in addition to increase in RevPAR. Now, what is RevPAR? RevPAR is revenue per available room. So, I'll give you a simple example for this, okay? First, we'll take an example of what do I mean by increased occupancy. Let's say increased occupancy is 10% and increased RevPAR is also 10%. Okay, so that at least it will simplify for you. Assume that the hotel has 500 rooms, and if I say occupancy has increased by 10%, I need to give you one more point. Out of 500 rooms, assume that earlier only 300 rooms used to be booked. Okay. Now if I say that their occupancy has increased by 10%, now 330 rooms will be booked. That is why I'm saying occupancy has increased by 10%. When I'm saying RevPAR has increased by 10%, what do I mean by that? It means that per room rent, assume it was 10,000 rupees. Now per room rent, they are able to collect at 11,000 rupees. That is nothing but increase in RevPAR by 10%. So both parameters have improved. Occupancy has improved, number of rooms that have been occupied that have improved, and also the revenue per available room or per occupied room that has also increased. In all, they have mentioned that there is a strong 16.5% growth in consolidated hotel segment revenue in October. So this is about Q3 number that they have mentioned. October also grew at 16.5%, and they have mentioned that remaining months, November, December, that is also set to grow at the same pace. So all in all, what did we understand? That Q2 numbers were cheered by the market, but how? For that, have a look at this. You can see that that this stock was in a sideways zone for some time, but after the results, yes, market gave a good cheer. We can also see a very nice big green shoot, volume shoot, and after which the stock has gone in the upward trajectory, almost up 13%. So I hope you have understood how EIH has outperformed or has generated alpha over Nifty. All right, with that, let's move on with the third stock. The name of the stock is, and I'm not going to tell that. Why? Because I'm going to write a blog on this third stock. It is going to be posted on our website, rachanaranade.com. What is different about this stock is that though the market has corrected by 7.5%, this stock has not gone up, but it has corrected lesser than 7.5%. It has corrected almost 4.3% from its all-time high. The name is absolutely well renowned. It's a Nifty 50 company and it's an infrastructure company. I think many of you might have guessed it right. But if you want to know the exact answer, I'm going to pin the link of this blog in the comment section, in the pinned comment, and also in the description box. So don't forget to check that out. Second thing, what you have to understand is that after you look at that, so in the blog, again, I'm going to talk about all 3 points, same points. Number 1, we'll talk about the financials. Number 2, we'll talk about the management commentary. And we're also going to talk about the technicals. So I'm sure you will enjoy reading the blog as well. Now, all in all, why did we do this entire video? The reason was very simple. Many people keep on asking me that how to identify stocks which can generate alpha. So what could be one simple thing? If the stock is showing good results, good quarterly results, good projections of the management, can ideally take the stock in an upward direction, right? That is one point. So what we need to understand is that just big names do not mean that the stock is always going to go up. Big names also can show bad results and markets are not going to treat them well. It's not about names, it's all about the results. It's all about the performance that you give, because of which markets may because of which the buyers and sellers may be more interested in that stock and may take the stock higher. So if the stock is not performing well, then what? Should you immediately panic sell? Answer is no. There could be a possibility that in one of the quarters the stock doesn't perform well. And that's not the case where you're going to ideally exit it right away. You should wait. You should understand, okay, this might be just one bad day or one bad quarter. If all 4 quarters, let's say Q1, Q2, Q3, Q4, all 4 quarters, the results are not that great, in such a scenario, you may consider selling that stock. But just one bad quarter doesn't mean that the stock is not good. So don't panic sell just based on one quarterly result. One more very important point, not only the numbers, the management commentary is also really, really important, especially what management feels about the future. So you have to check the investor presentations, you have to check the management con calls, you have to check whether they have planned any new product releases or not. Are there any mergers and acquisitions in pipeline? All these things impact the upcoming results, and that is what you have to track. And that is the reason why I have always said that don't keep more than 15 stocks in your long term portfolio, because you will have to do studies of all these companies, at least quarterly results, so that you can build more and more conviction in these stocks. One more important point that we learned in today's video is that it's said in cricket actually that the class is permanent but the form is temporary. So in a shorter time frame there could be some hiccups in prices, but if the stock is fundamentally strong stock, it should ideally go in the upward direction. Okay, so how to analyze the fundamentals? Of course, that's what we discussed today, based on some basic points, something like revenue, EBITDA, profitability, management commentary, all these points, right? And one more important point is that whenever you feel that yes, there are certain basic fundamentals that we need to revisit, they are really important. Because I always say this, that sometimes what happens is that we gain some knowledge and more knowledge and more knowledge and more, you're at this level. In spite of you being at this level, these basics are equally important. So sometimes it's very good to revisit these basics so that these small shake-ups don't shake your confidence, and your confidence is intact. You can ride on to some fundamentally strong stocks in your own portfolio. So don't forget to check the quarterly results of the stocks you hold in your portfolio. Don't forget to check their management commentary. And along with that, don't forget to smash the like button. Don't forget to subscribe to our channel. Don't forget to share this video with loads of your friends so that they also get to know about how to analyze results of companies, right? I hope you enjoyed today's video. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.